Are you on the lookout for your next investment property? Smart Property Investment and Pure Property Investment have done the research for you on where the hottest up-and-coming suburbs for 2024 are and where you should invest for the best return. The report is completely free to download. Visit smartpropertyinvestment.com.au. Don't make any moves until you've read the report. Take your next step with all the facts, backed by research and industry experts.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Okay, everyone, how you going? It's Phil Tarrant, host of the Smart Property Investment Show. I hope you're well. We're talking finance, as we do a couple of times a week. In the studio with me, Eva Loenzons from Finney Mortgages. She's one of their top brokers there, making dreams happen. Eva, how you going?
Good, thank you. Thanks for having me again.
Yes. Well, today, I'm good. Happy with that most recent rate rise, and we're here to talk mortgages. But the mail I'm getting is that I expect some 2 more or 3 more in the future before it stabilises and starts coming down. But don't want to go too deep into that today. What I want to chat about today, Eva, is at the new financial year is normally when new incentives are put in place. It's a nice sort of time. It's a new year to enact new things. One of the things I took away from this change from June 30 to July 1 was incentives, particularly in New South Wales, around stamp duty exemptions, which is a huge roadblock for a lot of Australians to get into the property market. When you think you've got to pay a deposit for the home, 20% usually, and then you've got to pay this big chunk of money to the state government in order to transact the sale, the stamp duty, as in putting a stamp on it saying that this has been done. It's absolutely madness, but this is how the state government generates a lot of its money in New South Wales and elsewhere. And they use that money to do all the things that state governments do, whether you like that or not. So stamp duty and payroll tax and land tax are the 3 main drivers of income for state governments. And you need to look at that. And 2 of them are intrinsically connected with real estate. So lots of money happens around real estate. Hence the reason why it gets a lot of emphasis within state governments. But the New South Wales government has increased stamp duty threshold. You don't pay anything now up to $800,000, and you pay the gap between $800,000 to $1 million. I understand if you pay more than $1 million on a property, I think you pay all the stamp duty, but anything less than $800,000, no stamp duty, which means that the barriers for entry for first-time buyers is a lot less. And now there is other grants available for first-time buyers. The $800,000 EVA is applicable to both new build homes and established homes. However, there is other grants, and they've been around for years, the first-time buyers grants, sort of $10,000 or so. It sort of moves up and down, left or right, depending on the whims of the government of the day. That's only for new homes. However, $800,000 not having to pay, up to $800,000 purchase price not having to pay stamp duty on is pretty good going. And there's some rules around this that smart investors can think about and start using strategically to get into the property market and then also start an investment portfolio. And that's our thrust of conversations today, because we have a lot of first-time buyers tuning into this podcast, trying to make headway and trying to understand the way it all works. But from what I understand, your team over at Finney Mortgages, finney.com.au, been getting a lot of phone calls lately from first-time buyers going, hey, how do I participate?
Yeah, more and more, I guess people want to get in the market, whether it's as a first-time buyer to buy a home or as an investment. And this stamp duty exemption now up to $800,000, I think, is going to lift a lot of roadblocks for that price range.
Yeah. So let's break it down a little bit, the strategy around it. Let's go to a little break. Stay with us, everyone. Back in a moment.
Stop overpaying on your home loan. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70+ lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finney.com.au.
Welcome back. Phil Tarrant from Smart Property Investment with Eva Loenzons from Finney Mortgage. Now, Eva, it's a big saving. So if you don't have to pay stamp duty on $800,000, how much is that?
That is roughly $31,000 that is saved just in stamp duty.
That's $31,000. That's $31,000 less you need to save in order to buy your first home.
Yeah.
That's a big incentive.
Yeah, it's a huge chunk of money. It takes, it takes years for some of them to save 30 grand. So, yeah, huge difference.
So this is where some of the stimulus is going, right, for supporting, I guess, affordability notion for Australians trying to enter the property market. And $31,000, like, it's not to be sneezed at. So that can either reduce the amount of time people need to save in order to get into the market, or it might change the home that they might be able to buy the first time around as a result of that. It is a big enabler, that incentive, and hence is why we wanted to talk about it. So have you got some scenarios for me on this? Have you done any deals yet now that this new 800K threshold?
Yeah. So I had pretty much the first week of July when this changed. A young couple came to us, Josh and Lisa. They've been saving for years. It's been at least 5 years, and they're up to $60,000 now, which is a good amount. But again, without this new stamp duty exemption, there's half of it that would be gone in stamp duty. And with 30K, there's not much, it's not much to get into the market. So they were really frustrated. They feel like they've been stuck forever and that they could never, ever buy a property. So when they came in, they're like, okay, look, we're aware of this change. What can we do now to make it happen? So that was the first discussion we had. Their dream is to buy, like a 3-bedroom unit in Lidcombe where they've been living, they've got family around, and they just want to start a family there. But also they understand that they'd like to invest also in the future. And they just feel like, they just feel really stuck, and they've just been struggling to save for years.
So are they now taking action? Is it just accelerating their ability to get to the market, or are they going to change what they're going to buy?
We found out that, they've got obviously the idea as well that's, I think, around a lot, that you need 20% down to buy your first home. So if you think about 20% on an $800,000 property, that's $160,000. That's huge. Most people will never be able to save that much money in their lifetime. And on top of that, stamp duty and legal cost and a lot of things. So you need pretty much $200K to buy a property for $800,000, and that's what they believe and that's what they thought, and they just didn't want to, explore even more. So when they came to us a few weeks ago, and then they realized that, well, I don't have to pay 30K in stamp duty, and I don't have to put 20% down. Some lenders will actually lend up to 97% of the property value. Then with 60K, suddenly they can buy a property for $800,000. It does work. That's enough cash.
And the challenge you have is that a lot of people will be saying, well, you probably shouldn't be buying an $800,000 property at 97%, because what happens if interest rate goes up and then people find themselves in the challenges they're in right now. The reality is that if you're buying real estate in Sydney, a house, for example, irrespective of where you're buying it in Sydney, you're going to be paying a lot more than $500,000 to $600,000. And now there is apartments available at a more affordable end, but families want to live in bigger premises. The challenge with these type of incentives is that it may sort of support people's attitude that they can buy a bigger, more expensive house because they have to pay no stamp duty. And that's fair enough. And that's part of the logic of it all. The other side of that, though, is that if people are buying these properties at the, close to redlining their expenses at mortgage rates where they are right now, and they go up, they can find themselves in financial distress. And this is a sort of double-edged sword that a lot of Australian first-home buyers need to deal with. But the practical reality is that you have to spend that much money in Sydney. So if you can't afford that, what's your choices? You keep renting or you move to another state, and you see that happening.
And really the rent that they're paying now is $650 a week, so it's quite significant anyway, and they don't know. Next week could be $700, could be $750. If they have a family soon, they might have to move into a house, and it could be more. So at least with the interest rate, you can fix your loan, and then you know what you're going to pay for the next few years. So even though there is obviously risk to doing this at 97% or even 90%, at least there's certainty there in the sense that you can fix the loan at a certain rate for a certain amount of years and budget for that.
Yeah, so there is ways to plan around the risk, and a good broker and a good accountant can help you with this type of stuff, and being an enabler as well. Now, a lot of people would argue, well, when is the best time to buy a property? It's when you can afford to buy a property is the right answer. And depending on market conditions. Now, if you're buying in a more subdued market, and some people would say it's a subdued market at the moment, it's come back a fair bit from its highs of a couple of years ago, but property is growing in Sydney. We've seen that in the most recent numbers. But the sooner you can invest in property, this is one logic, the sooner you can invest in property, the sooner you have skin in the game. And it means that if markets are increasing, you get that upside growth quicker and for longer. And I know a lot of people either who have timed that brilliantly and bought at the bottom of markets and got all the upside, even though they've got loans at 90% LVR and 95% LVR and 97% LVR. So there's risk and return with it. The negative of that is that if you overextend yourself at a point in time and you find yourself struggling to meet your mortgage repayments and you need to sell the property and the property has gone backwards, and property does go backwards in value, people can find themselves in negative equity. So they've either got to try and hold on or they've got to sell and take a huge haircut, which typically means they'll at least lose all of their deposit. Now, if that was to take place and you sell your property within a year, I imagine the state government's probably going to be knocking on your door asking for you to pay the land tax. So I want to have a bit of a chat around the edges with this. We'll just go to another break. Stay with us, back in a moment. Welcome back. Phil Tarrant from Finney, chatting with Eva at Finney Mortgages. Now, Eva, should that take place, what I mentioned just before the break, and you have to sell your property within a year of securing it on the basis that you've got a free pass on the stamp duty, do you have to pay it back? Do you know?
Actually, I haven't looked at that yet. I'm not sure if that would be the case.
Yeah.
If it's some hardship, I don't know. It could be.
Yeah. I'm just trying to think through the different scenarios. That's sort of like that's the conservative view of it all, on the basis that you do buy up to $800,000. But the other side of this, and this is the important bit for this podcast and property investors, this can be an ideal strategy for a lot of investors to get into the market. So from what I understand, if you buy a property in New South Wales up to 800K and then the gap between 800 to $1 million, if you go down that pathway, you don't need to pay stamp duty, and you only need to live in that property as an owner occupier for a year before it can become an investment property. Is that correct?
Yeah, that's the rule. That's the rule that's been there for a long time, even though before that it was only $650 to get the stamp duty exemption. So I think it will bring back some investors back in New South Wales, where at the moment we see people investing a lot in Queensland and Perth, even in Victoria. I've seen a few now coming back for that because, they were priced out in Sydney to buy their first investment, but that actually can help if they're willing to go and live in it for a while. Yeah, that can definitely be an option to get into it with no stamp duty and a very small deposit.
So that for our younger investors or first-time investors, no age limit on that as well, right? If you're a first-time buyer once, correct?
Yes.
Yeah. This could be a great way. So if you're a 50-year-old person, you can still be a first-time buyer.
Yeah.
You still got that's good. So if you're thinking about this, think of it within a 12-month cycle, raise a deposit as large as you possibly can do. You can secure some finance against it on the basis that you have regular, repeatable and predictable income. Banks will service you around that. Buy a property, live in it for a year, so that you don't have to pay stamp duty. And then after that 12-month period of time, you can start using that as an investment property, and you can move out and rent again or go buy another place as a non-first-time buyer. What a great way to get onto the market. What a great accelerator, Eva.
Yeah, that's great. So Josh and Nida, they were right to think and to know that they were ready actually to buy a property, which when they came, they're like, okay, how much do we need? What else can we do? They're like, no, you actually are ready. So we put a pre-approval in place. They actually got issued last week. So it only took a week to get it sorted, and they're looking at properties.
So they've found the place they're in?
No, not yet. They're looking to find something. But, from, 2nd of July when they called thinking they couldn't do anything, and now it's just mid-July and they're ready to look and buy something. In their head, it wouldn't have happened for years. So it will enable a lot of young, I think more like the younger side of people to go and buy something in Sydney, in the Sydney market.
So they got a pre-approval with a major bank or a mid-tier bank? Yeah,
it was with NZ, which can go quite high in terms of how much you can borrow against the property. And they can do it quite quickly. So that's what we went there at this stage. That's
cool. And do you know what they're going to buy? Unit, house?
They're looking at units at the moment because they want to stay near their family in Lidcombe, and 800K, that's all you would get there, a unit. But that's a good start. That puts that gets them in the market, and later they could sell it, buy something else, use it as an investment, whatever it is they would do. They can do it now because the thing is, if they wait to save another 5%, let's say, that's another 40K they would need to save. That might take 4 or 5 years for them to save. how much is the property, in Lidcombe going to be worth in 5 years? Probably a lot more than, the 40K they would have had to save. So,
and that's the logic, right? It's an enabler. And I'm sure you can also, there'll be LMI connected with any loans over 80% LVR, LMI, lender's mortgage insurance. So there is a cost to that as well. And at $800,000, LMI, it won't be a small amount.
No, it would be around $28,000. But again, that's not a cost they have to factor in right now. They don't have to come up with it right now. It's added on top of the loan. And again, if they had to wait another 5 years to buy a property, that would cost them a lot more than the $28,000 in LMI.
That's a really good point as well. So you don't need to stump up that money for LMI. You can, it's called capitalising into a loan. So if your loan is $500,000 and the LMI is, what do you say, $20,000 or $10,000, that means your loan would be $510,000. And again, that's a nice way to accelerate onto the market on the basis that hopefully the market keeps going up in value. But that's a choice and a decision you need to make. Eva, just a short podcast. I wanted to touch on that to give some sense to it. If you're a first-time buyer and you're sitting there thinking, I want to get going, how do I do it? Well, there's ways and means around it. First-time buyers, banks, it's good business for banks. If you can show good, steady, repeatable, predictable income, banks are happy to lend you money at a higher LVR than at 80%. And the banks want to get Aussies into property, but in a safe and secure way. That said, though, the risk still sits with the borrower. The decision sits with the borrower. The responsibility about what you can afford and what you can buy and what you're happy to make repayments on rests with the borrower. So I hear it all the time, Eve. You probably see it's not my fault. It's this other person's fault. I shouldn't have done this, but they gave me more money that I could have repaid. Well, it still sits with the borrower. You've got to make those decisions and be accountable and responsible for it. If you have any questions at all, though, your mortgage broker can help you out. No doubt the team at Finny can, Eva. What do they need to do to have a yarn with you guys? You're going to get bombarded by first-time buyers sort of sitting there thinking, I want to become an investor one day. This might be my way. Best way?
Yeah, just leave your details on finny.com.au and we'll be in touch to book you in and have a chat.
Brilliant. Nice. That's Eva at Finny Mortgages, finny.com.au. I want to say go to these guys, if just pick up the phone and pick their brain. They're always happy to have a chat. They're a good outfit over there. They're doing my loans at the moment, as I've spoken about as well, which I'm probably a bit of a pain customer, not like an easy first-time buyer customer. We won't talk about that today. Thanks for tuning in, Smart Property Investment. So remember to check out smartpropertyinvestment.com.au. We'll see you next time. Until then, bye-bye.
Thank you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.